Do you ever wonder how an options trader keeps their portfolio balanced, grows their account, and navigates challenges when strikes go in the money? Today, I'm pulling back the curtain on my personal trading account to show you exactly how I've grown it over the past few months using bull put spreads. I'm Patricia Saylor, managing partner of Saylor Financial Fundamentals. Welcome to the introductory episode to my new live trading series on bull put spreads. In this series, I'm giving you a behind the scenes look at my real trading account where I actively trade bull put spreads. This isn't just theory. This is how I manage trades, handle risk, and build my portfolio in real time. I started trading bull put spreads in this account on September 19th with $1,500. 3.5 months later, I now have $2,610 in cash, more than $1,000 in free cash for repairs, and most importantly, no positions currently in the money. This growth is a direct result of careful trade management, rolling positions when needed, and keeping my portfolio balanced. To kick things off, I'll walk you through my active trades. We'll focus on my IWM trades, some of which were tested when the strikes went in the money in December and required rolling for ongoing income and to avoid losses. I'll share the detailed spreadsheet that I use to track trades, calculate returns, and guide my decisions. I'll explain how I maintain about 1/3 of my account in cash to ensure that I'm always ready for repairs and adjustments. This strategy has been essential in managing risk while continuing to grow the account. My IWM trades were a great lesson in staying calm and proactive when the market challenges you. I handled these tested positions, adjusted strikes and expirations, and still kept my growth on track. It's all about having a plan and managing trades at the portfolio level. Here's what you can expect in upcoming episodes: how I select and set up trades to align with my portfolio goals, my approach to rolling positions when strikes go in the money, how to calculate critical metrics like annualized return, break-even points, and likelihood of assignment, tips for using a trade log to improve organization and decision making, strategies for keeping a portfolio balanced and prepared for unexpected market moves. I'd love for you to join the conversation. Drop your questions and thoughts in the comments, and if I can, I'll incorporate them into future videos. Don't forget to hit subscribe and turn on notifications so you don't miss an episode of this live trading journey. So take a look with me at my account and my spreadsheet. We'll look at all of it, but we'll be focusing on the IWM trades that were tested and how I managed them to stay ahead. Whether you're new to bull put spreads or a seasoned trader, you'll see practical strategies for navigating real market conditions. Let's take a look at the account as it stands right now. I have 3 positions open, one on IWM and 2 on SPY. The IWM position expires in 4 days, and the SPY positions expire in 2 days and 8 days. I am using $1,500 of my available $2,610 to secure these positions. I've been working on freeing up some cash so I can do a reset for these trade videos. But this is a live trading account. You can see up here. I also trade paper money for a lot of my videos, but I decided that it's just going to be too much to keep up with a paper money account and a live trading account. So I'm going to show you my actual live trading portfolio. And let's click over for a minute and take a look at the trade log so I can show you what I've been doing up until now. Let's see, I'm going to scroll down. I have had positions on this gold ETF, but I don't have anything open right now. I didn't start trading gold until October 29th. When I first opened these positions, I started with IWM, SPY, and QQQ. So let's just take a minute and look at this IWM history. The first trade I opened was on September 19th. It was a 4-day bull put spread from September 19th to September 23rd with strikes of 215 and 213. The share price at the time was 222.28. So I sold the spread, brought in $9.68 on a 4-day trade, which translates to a 441% annualized return. And then on September 23rd, I rolled it out another 3 days with the same strikes and brought in 1205. So I brought in more income on a shorter trade because the share price had dropped from 222 to 220. When I rolled it the next time, I actually decreased the strike prices to 214 and 211. So I increased the spread or the capital at risk from 200 to 300, but I did lower the upper strike price to make it less likely that the position would go in the money. And then on September 30th, I rolled it out 7 days and reduced the spread back to 200 instead of 300. So if you look at the annualized returns on all of these trades, it's been 441%, 733%, 375, 379. And for a long time, this position was great. I felt golden. Nothing was going in the money. And I just kept rolling it every few days. It took 5 minutes, and I'd make another 9 or 10 or 15 or $20. And then right here in December, things turned a little sour with this position. The share price dropped to 219, and I had a 225, 221 position. So I needed to roll it down and out and try to move it out of the money. So this was the first time that my trades on this position started to be tested, and I got to try out some trade management strategies. On December 19th, I rolled the position from, I think here it was at 230 and 227. So it was this position that I rolled out, and I decreased the strike prices to 224 and 219. And I still brought in $8, but I had to increase the spread to $500 instead of $300. And my annualized return was not as high as it had been earlier. And I was still slightly in the money with this position. And even with the share price recovering up to 221, I was still in the money with the position. So on December 23rd, I rolled it again, this time to 221 and 219. I'm trying to work the strike prices back down. And like you see here, I had to increase to a $700 spread. I brought in 1134, but because it was $700 8 days, my annualized return dropped to 73.91%. But rolling out there was still a good decision because I've been able to kind of slowly work those strikes down. Here, 218 and 215, 217 and 214. And right now, I have this one position open with strikes of 223 and 216. And when I rolled it on the 31st of December, the share price was 220.95. So if we go back and take a look at the account again, you'll see that I still have this 222, 215 spread open. There's $700 of capital at risk, but the share price has recovered to 225. So it's now out of the money. And I have a realistic chance of either rolling it out further in time and reducing the spread so that I have less than $700 invested in this particular position. And I have been generating income every time I touch it. I'm hoping that by the time we get to the end of this week, it will stay out of the money and I'll be able to either close it or reduce it. I'm not going to go quite as in depth with the others, but I will quickly show you. In addition to IWM, I've been trading QQQ starting September 19th with spreads of $2, $3, $400. A couple of times I've had to increase it to $500 in order to repair something and bring down the strike prices. But overall, I've done really well with QQQ. In the last 3.5 months, I brought in $343 and have never had a spread wider than $500. So it's been doing just fine. And then here I have SPY. When I started trading it, the share price was $5.69, and I've been uh, trading and rolling spreads of 2, 300, 100. I did get tested a little bit um, here in December. I had to increase some of the positions to $500. But overall, it's been doing fine. I don't have anything in the money right now. And I brought in $412 with these spreads of anywhere from $200 to $500 open at a time. Here, we'll just do a quick look at gold, which is the other one I've been trading. I've had $200 or $300 at a time invested in these trades, and my total income has been $72. And I've been trading this one for a lot shorter time. I traded it from October 29th until December 23rd. So I will probably go back and add some gold positions again. So if we go over and we look at the portfolio level, I started trading these in September, 3.5 months ago, with a cash balance of $1,500.50. And at this point, I have $2,610 in cash. The net liquidating value of the account is $2,466. And these three positions that I have open right now are all out of the money. I am looking at them not just at the individual trade level, but at the portfolio level. So when one trade gets tested or is getting close to the money, I will allow other ones that are doing better to expire worthless, or I'll go ahead and close them out for $1 or $2 so that I can keep cash available, like in the account, in case I need to repair anything. I try to keep about 1/3 of my portfolio value in available cash for trade repairs, and that's allowed me to avoid being assigned or taking a loss on anything. So if you have any questions, let me know. Drop them in the comments. Together, we'll navigate the challenges of trading, stay flexible, and continue to grow as traders.